Hi everyone, welcome back to my channel. Today's video, I will talk about something that I've learned this week when it comes to trading and why you should really wait for your setup for financial growth in strategy trading. So, um, the overview of this video will talk about how to prevent emotional trading, improve risk reward, consistency, capital preservation, and psychological advantage. Very short video, and we're going to talk about all those five things right there. So, the first thing that I learned is to prevent emotional trading. Why? Because jumping into trades out of fear of missing out, we all know about FOMO or boredom often leads to poor entries, which really happened to me this week. So every time I've noticed that every time that I wait for my setup, I would make good entries and good exit and make profit without being scared that something bad would happen. But anyway, the market is the market. You never know what's going to happen. But I'd rather lose with my strategy than just going in and out without knowing what I'm doing. So that's really gambling, not trading. So one of the things that I've learned um, to work on is my fear of missing out with the market. You're not missing out on anything. So because the market is moving like 24/7 almost. So you're not gonna miss anything. So a lot of us as traders, we have FOMO, and I'm still working on it. I don't know about you, but I'm still working on that. So that's the first thing. The second thing is to improve risk reward. Why is it so important to improve your risk reward? So your strategy, let's think about it. So your strategy was designed around specific conditions, like right? So like price actions, the indicators, support resistance, supply demand, um, all of those. Okay. So entering early usually means you're taking on more risk for less reward. That's not a good sign. And I know some people sometimes they over leverage. Okay. But how's the outcome? That's what I want to know. What is the outcome? Um, Another thing is that it's important to wait for confirmation. Waiting for confirmation increase the odds that the trade will move in your favor. I had to learn that the hard way. And consistency, that's the one that I really, really, really want to pinpoint. Consistency, consistency, consistency. Why? You already know why, but sometimes I think someone else need to remind you, or even myself. I'll take my own advice, um, just to be consistent. Um, Consistent results comes from consistent actions. So if for example you only take trades that fit your setup, you're executing a repeatable process instead of gambling on random moves. So it's so important to keep your consistency when it comes to trading. It's not just like today you come in and you trade, then tomorrow, which it can happen, to be honest. Tomorrow you don't see a great setup, don't trade. Then the next day, and the next day. So you have to like really keep the consistency of going in the chart. You learn, um, review what you learned. Okay, it's not about like always going in, how oh, I have to take a trade, I must take a trade. Otherwise I'm gonna miss something. No, it doesn't work like that. And that's why a lot of you, a lot of you don't know how to preserve capital when it comes to trading. So, because when you go in, you see the chart and you be like, okay, I have to take a trade, but you really don't have to. Um, you have to learn. or even myself sometimes I have to learn when to walk away so I can so I know how to preserve my capital. So every bad entry, it's into your account. That's it. So every time you make a bad entry, you're in the negative. So protecting your capital is just as important as making profits because it gives you staying power in the markets. The more you know how to manage or how to do your capital preservation, the better you'll be at making profits, or the more you keep your accounts. Okay. So with that in mind, you will have like a psychological advantage. Um, because when you wait for your setup, you're trading with patience and confidence. So when you trade with patience and confidence, um, you're reducing your stress and second guessing because you know you follow your plan. And like I said earlier, I'd rather lose with my strategy or plan rather than just getting in and out of the market without knowing what I'm doing, or just because I see a move, I wanna jump in, which is FOMO, right? So um, like I said before, I wasn't gonna make this video long. In short, what I want you all to learn is that the market is always moving, but your edge only appears when your setup aligns. So if your setup doesn't align, just think what's going to happen. So wait, wait. Waiting means you're trading with discipline, not impulse. And that's really what separates like traders from gamblers because you want to trade with disciplines. You don't want to trade on an impulse. And then, boom, guess what? The market will teach you lessons. I'm telling you, I don't know how many times I've learned lessons by gambling in the market and said, hey, it doesn't work like this. So just had to like learn my lesson and keep applying, keep applying. So that's where I'm gonna end this video. Without further ado, I'll see you guys in the next one. Bye.